You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program here on the old Options Insider Radio Network, where we break down what's going on the other side of the fence there, the crypto side of the fence. So Bitcoin, the options, the futures, the volatility, the term structure, the spot, all that good stuff, as well as some of the altcoin and everything else going on in the world of crypto. My name is Mark Longo from the aforementioned network, as well as, of course, from the ever-exciting, at least we hope so, theoptionsinsider.com. Brand spanking new coat of paint over there on the old website. Head on over there if you haven't been there in a little while. Kick the tires and light the fires, as they like to say. And speaking of lighting the fires, we've got a great guest to help us do just that. So without further ado, let's keep on rolling right on into the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat. This is the portion of the program where we welcome on guests from throughout the world of crypto and proceed to pick their brains for the benefit of you, the listener. And today's guest is actually an old friend of the network, even though she's never been on before. She's had many incarnations on the options side of the fence, now hanging her hat over there in the crypto land. She is Jeanine Hightower-Sellitto, the managing director over there at Gemini. Jeanine, welcome to the Options Insider Radio Network.
Well, thanks for having me, Mark.
You obviously spent some time back in the ISC. We had Gary on many times, Gary Katz, CEO, even had Boris on a few times. I don't think you ever made it on. So in this case, welcome for your first time here on the network. We're happy to have you.
I'm excited to be here.
Well, Jeanine, as we are wont to do with all of our first timers, why don't you go ahead and give our audience a little bit of an overview of your background in the financial world and how you found your way over there to Gemini?
Sure, great, thanks. So yeah, as you mentioned, I spent most of my career working as an exchange operator. I joined ISE, and for those who don't know on your radio show, the International Securities Exchange about 15 years ago when it was still a startup in the options markets. And I stayed with ISE pretty much full circle from the early days through the IPO on through 2 acquisitions, the last of which was to NASDAQ in 2016. And I spent a year after that as the ISE CBOE integrating ISE's business into NASDAQ. And I think a lot of your listeners, I hope a lot of your listeners are familiar with the ISE story, and maybe I might be dating myself a little bit here, but in the early ISE days, we were basically trying to bring a new market model to options, displacing what was floor-based trading with a fully electronic model. And literally, I think my first days at ISE were trying to visit trading desks and get people to stop using paper tickets and phones and send orders to what was this crazy idea of electronic matching engine. And so, that seemed very innovative at the time, and it really was at the time, and spent the bulk of my career, living through ISE's days, fast forward to 14 years later, and, that business is consolidating. We've seen exchange operators sort of, few more exchanges always, but fewer exchange operators. And so now I'm at NASDAQ and thinking about what's next for me. When I thought hard about it, what I really loved about ISE was, apart from all the great people like Boris and Gary and all my colleagues and some really fabulous customers as well, what I really liked about being at ISE was the early days of the innovative spirit and the energy that came along with it, of seeing something, that could be done and should be done, and just sort of diving in. And even when people were naysayers and said it wouldn't work or it couldn't work, finding a way to make it work. And that's really what I wanted for my next role. And I wasn't really necessarily thinking crypto at the time, but I was really thinking, like, this is what I want for my career going forward. And so, when I was at NASDAQ during that year, it was probably late 2016, Eric Knoll, who was still at Convergix at the time, was hosting Cameron Tyler Winklevoss, which hopefully most people on your call know that, they're the founders of Gemini. And I got to hear their story firsthand about starting Gemini. And this is, 3 years ago now, actually. And what I heard from them were many of the same things from their mouths and their philosophy on business that really resonated with how I feel about business. And it was things, like an honest approach to working with regulators, bringing high-quality product to your customers, whether that's tech offerings or support offerings or service offerings, not cutting corners and not compromising in security, and really listening to what the customers and the market's demanding. And so, to fast forward 3 years, that's really what put me on the path to Gemini. Obviously, I didn't show up until about a year ago. I've been at Gemini just a little over a year. But it was that night that really resonated with me and put me on the path to Gemini. But interesting factoid, I think I'm probably the only person you've ever met who's worked for 2 different exchanges called Gemini. ISE also had an exchange called Gemini.
I hadn't even thought about that till you just brought that up. Look at you with a little factoid. I like that. That's why I wanted to have you on, for the factoids alone. But, it's interesting. You mentioned you've been there about a year at Gemini. You picked an interesting time to join the exchange. Of course, a lot has happened in the crypto space over the course of that past year. We started this show. This show is fairly new for us as well. It started at the beginning of this year. And, of course, at the beginning of the year, all of the talk was, oh my, look how far Bitcoin and crypto has fallen. Look at the bear market, how long it's extended, the longest ever. Through most of Q1 into early Q2, all of a sudden we saw that talk of testing 3,000 to the downside, and oh my, how the worm has turned to, wow, the worm truly has turned, because of course we saw the major correction we've seen to the upside now in the crypto space, Bitcoin going up to 10,000 and indeed beyond, and kind of settling out now and vacillating around that 10,000 level. What's it been like for you over the course of the past year, and what's it been like for Gemini to see these 2 extremes in the crypto space? First, of course, testing the tail end of that bear market, maybe testing some of the will of the client and customers out there, and now the resurgence. What's that been like over there at Gemini?
Yeah, it was definitely an interesting time to join Gemini, just at the cusp of sort of the bear market for a while. And it was interesting because most people here had lived through sort of the run-up initially and then sort of joining on the precipice of some down months in terms of volume. But what's been refreshing is the strategy really hasn't changed. We've been constantly investing in our business. I think there's a very long-term perspective on the crypto markets, especially here at Gemini. And so we haven't really wavered. We've been hiring throughout the bear market. It's not been a slowdown from that perspective. And in fact, a lot of the products that we're bringing to market now, we've been working on over the course of the last year. There wasn't this decision to slow down. It was really press forward. And, as I think you recognize, most people recognize, products don't come to market overnight. They take a long period of time. So over my tenure here, these are some of the products I've been working on since I got here, and I'm really excited to bring them to market. And it just happens to coincide with some good price movement. So I'm very fortunate from that perspective.
Well, you mentioned new products and new offerings. I'm not sure if anyone told you over there, Jeanine, but this is supposed to be kind of a quiet time, early September. Everyone's coming back from vacation, late August, the dog days of summer. Not a lot going to happen in the early days of September, but apparently no one told you folks over there at Gemini, because you have a lot of things you've rolled out over the past couple of weeks, including two big ones, Gemini Custody and indeed Gemini Clearing, two terms that are very much front and center on a program like this because they're two very substantial pain points in the crypto markets right now. So walk us through, what did you guys just announce, and what are you bringing to the table in the custody and in the clearing side of the crypto space?
Yeah, these are really big ones, and we've been hard at work over the summer and longer at bringing these to market. So we're excited to talk about them, and finally being able to talk about them from my perspective is also really refreshing. The first is our custody solution, which we see as a real need in the marketplace today. Everyone talks about custody as the need for institutional investors, especially those that have outside investors and have a mandate to have a qualified custodian hold their assets. Everyone's trying to solve for that puzzle. But in the crypto sphere, which is really different from traditional assets, where honestly, when I worked at ISE, I don't think I ever thought about custody of securities as being a complexity of the market or the market model. But in crypto, it's different, and it is. Most exchanges are full reserve, so you have to have assets on those exchanges in order to trade them, whether it's fiat or whether it's the actual cryptocurrency you want to sell. And that comes sort of a trade-off to custody, which for cryptocurrencies, we typically talk about cold storage, the utmost of security related to keeping assets held offline in really secure solutions where in order to physically get access to those assets, there's multiple layers of governance and control, as well as physical security and procedures that make getting those assets really kind of difficult, and which is the point ultimately. Getting at the assets is difficult, and that's really what makes them secure in many ways. And we can talk about all the technology and all the procedures and all the vetting that goes into that. But at the end of the day, where I come from dealing with investors and dealing with traders is that people really need to have the security and the trust and the reliability of their custodian, but they also need a feature set that makes those products work for them. So having assets that are locked up in some facility that they can't trade is really a deal killer when it comes to, the market's moving and you can't really predict when that might happen. So you need access to those assets in order to take advantage of any type of market movement or unforeseen circumstances in price for those assets. So we've really been able to bring the best of breed of both having an exchange under our trust company umbrella and also having a cold storage, offline, highly secure custody offering where we can now make the assets in cold storage available for trading on an instantaneous basis. So that's one of the new features of the custody product that we've launched. It's the instant ability to trade assets on the exchange that are held in the cold storage custody solution. And we think that's a real big win for traders that need both security as well as liquidity in order to trade their products.
Yep. I'm trying to think of all the legions of guests we've had on this network and on this program talking on the different aspects of the crypto space, and it seems like all of them come back to a handful of pain points, and custody is usually at the top of that list. And I've heard horror stories of trying to execute any decent sort of size trades, whether it's in the spot or the options, and having to wait minutes, hours, sometimes days for the other side of that transaction to get processed and for it to get moved over to the account. And it's effectively this window almost of terror where you don't really know what's going to happen, if you're going to see the funds change hands, the assets change hands. So it's a huge issue, particularly for some of these institutions that want to get things done quickly and done for a fair amount of size. So it sounds like, Jeanine, you're saying you've solved that problem. We no longer need to worry here in the crypto space.
That's right. And to piggyback on that, so we've got the custody solution, and then as you mentioned, we launched a clearing solution that, again, within people's accounts, we can instantaneously transfer funds between them at least on the exchange wallet, so that if people need to clear and settle a trade that's not done on our exchange, because we don't do any OTC brokerage, but we can facilitate the settlement and clearing of a transaction that they use an OTC broker for, or even perhaps it's a bilateral trade they've negotiated with another counterparty, and they want the assurance that there's a trusted agent that's sort of holding both sides of that trade. So not one of them is being left out to dry, as well as really speeding up the time horizon for that settlement.
So instantaneous transactions and trying to ease some of those counterparty concerns, which are always a niggling issue in the crypto space as well. Sounds like you've solved the number one, number two problems here. And I guess we're done. You've solved it all. Crypto is fixed.
Yeah, we're solving more problems too, but those are two of the big ones. Those
are two pretty big ones. If I had to add it up, I had a spreadsheet of all the lists of concerns I've heard expressed by our guests. Those have to be number one, number two, particularly for the institutional demo. And I'm curious, you've hung your hat in the institutional side of the space for a long time, Jeanine. We've heard interesting, some might say conflicting things about what's going on with institutional demand for crypto. We heard for a while there, certainly when CME and CBOE were racing each other out of the gate in the end of 2017 and Bitcoin was threatening 20,000 and everyone was obsessed with crypto, there was a lot of perceived and indeed public institutional demand for crypto. Then, of course, as we hit what some have termed the crypto winter, I like that term, maybe some of that fell off a little bit. And maybe with the recent resurgence, we've seen that come along. We've also heard people saying that institutions are these days saying one thing in public, maybe being a little bit dismissive about crypto in public, but behind the scenes, they're staffing up and getting ready and trying to do a lot of size because there is indeed client demand. Obviously, you live in that world 24/7 dealing with institutions on the crypto front. What has the evolution of that demand been like over the course of the past year or so since you've been at Gemini? Was it at a nadir when Bitcoin was at a nadir, or does it kind of remain steady? What have you seen over there over the past year or so?
I think this market continues to evolve. And look, returns always drive traders. I think that is sort of, number one thing for traders. But I think for investors, especially institutional investors, it's really acceptance of crypto as an asset class that's helping them move forward and move the needle to get involved into crypto. I don't think it's necessarily going to be a big bang overnight. We do see a lot of activity in terms of people prepping both on a trading as well as really on a custody side for being able to handle crypto assets. But ultimately, it's our job to deliver the tools to make this all possible. So, we're not out really, trying to convince people to invest in crypto. That's not our place and that's not our business. But really delivering the tools, whether they're, trading tools like, fixed APIs and user interfaces that allow them to trade on our platform. And we've done a lot with just like, the ability to, for an institution that has many strategies to have, sub-accounts as part of the structure. I mean, sub-accounts are not something that we've, a really super sexy term to talk about, but from, a feature set is pretty important for some of these institutions to get ready to handle this. For, fiat transfers, we've added the capability for 24/7 fiat transfers so people aren't married to the wire system. So there's a lot of tools that we're trying to build apart from, what just is a really, secure compliance set for Gemini. It's probably the hallmark of our business is our strong compliance program and our regulatory, appetite for pushing forward regulation and following regulation. So I don't think from, Gemini's perspective, we're necessarily trying to convince institutions to start trading crypto, but being here and being ready for them when they are. And I think it's something that we continue to see develop in a really positive way.
It is amazing for how big and how much mind share crypto has attracted. How much of the plumbing is still missing? How much of the underpinning of a traditional market is still not in place? So there you go, Jeanine. Maybe you've signed on to be the plumber of the crypto market. How does that sound for a job title?
I would like to be the plumber. Yep.
The sexiest of titles, the crypto plumber. I want to get to that regulation you mentioned. We just had Hester Peirce on not too long ago, the crypto mom herself, talking about all that on the show. But before we get to that, we've had a lot of questions about what went down with the futures over there. Obviously, the futures were a joint product with Gemini and, of course, with the CBOE listing them. I mentioned earlier already kind of the race everyone watched back at the end of 2017 with CBOE and CME effectively racing to see who could be the first out the door to list the futures product when Bitcoin was threatening 20,000. There was a lot of debate. CME had the larger coin. CBOE had the smaller one contract coin. There's a lot of debate about which one would end up getting the volume. And as it turned out, A lot of the volume over time ended up flowing to the CME contract. CBOE obviously announcing they were going to effectively delist them towards the middle of this year. I think that surprised a lot of people because it seemed like there was a lot of interest in that. So I'm curious from your perspective, from Gemini's perspective, what happened with those futures? Why did the volume never really materialize there?
Yeah, I don't really want to speak too much about what happened with CBOE, but I will comment and tell you that we are now part of the CME index and happy to be so. So those that are looking to trade future can look to the CME product and find Gemini included in that rate.
Yeah, I did notice that you guys are now part of the CME Bitcoin reference rate, which is, of course, what is there to drive a lot of the value of those futures over there. So, yeah, obviously you can't speak from CBOE's perspective, and I respect that. But maybe from Gemini's perspective, I've heard a lot of different interesting ideas about maybe why some folks would choose, one coin versus the other. Any thoughts about maybe why the volume didn't materialize there from the Gemini perspective?
No, I don't really have any thoughts on why. I mean, I think it's hard to figure out. I read the same press that you do in terms of what people are doing on the future side. I'm not privy to any of it. So, I don't really have any particular insights on that. But just like any product, why people trade one versus another. I think the contract size is one of it. The pricing's another. The margin requirements. So I think it can be a combination of all of them.
And what was it that made you guys finally decide to jump into the Bitcoin reference rate at CME? What made you decide to finally become a part of that calculation?
Well, I think the timing was really good. So that's for one. But it's a growing product at CME. We're happy to be part of it. Crypto Facilities is the licensor of the data, and they do a really good job of vetting exchanges. So we think it's a really great product to be part of.
And I'm curious. We get this question all the time, Jeanine, so I'm tired of answering. I'd like you to answer it for me instead. You obviously come from the options industry. When everyone was racing to list futures way back in the day now, it seems like ancient history, but when everyone was racing to list futures in the end of 2017 into early 2018, the obvious next question everyone was asking us was, of course, when are we going to see options? When are we going to see options? Everyone was thinking by the end of Q2 at the latest, 2018, we would, of course, have seen some listed options. Of course, fast forward, here we are heading into Q4 in 2019 and still no real listed options on the board. You're an old school options hand like myself. Why do you think that is? Why do you think we haven't seen a listed options product yet?
I don't know, because, I hear people with the same request from me all the time. And obviously, you have to ask CME or, when that's going to come and not me, because I don't have any control over that. But it is something I hear again and again.
But you're the plumber, Jeanine. You're the plumber of the crypto space. You make it all happen.
I know, especially from the options crowd that I still keep in touch with. It's a frequent request. So hopefully that'll happen sooner rather than later.
Yeah, I have to say, obviously it's in our name, but it is definitely one of the number one requests we receive. As if I had the power to make it happen. I've asked it when CBOE had the futures. I've asked CME many times. I continue to ask them. We continue to get differing responses on that. But hopefully, someday in the near future, we'll be able to talk about a listed options product here. Speaking of upcoming products, another question we have a lot. You mentioned the regulatory side. Let's get to that a little bit, because that's kind of always been an area, I think, of a little bit of consternation for some folks, particularly coming from the institutional side, looking at crypto. They see it as kind of a bit of the Wild West, maybe a little bit of a scary marketplace, not quite as regulated as the traditional financial markets like your cash equities, your futures, your options, those sorts of things. This has been a little bit of initiative for you guys over there at Gemini, maybe trying to counteract that a little bit, trying to provide some regulation. In fact, you have the mantra over there that you need rules, effectively. You need rules in crypto. So what is your initiative over there to try to bring a little bit more regulation, a little bit more of a rule set to the crypto space at Gemini?
Yeah, when I got to Gemini, it's definitely a different set in terms of how regulation governs this market. And it is really different. And just for some background, we're regulated as a New York State trust company. And I don't think this part of our story is really well understood, but Cameron and Tyler Winklevoss didn't start the New York State Trust Company because it happened to be in New York. They actually sought out the most strict regulatory regime they could find for their crypto exchange. And so that's why we're a New York State Trust Company. But for a lot of our customers, even just understanding the way what we're regulated, forget about where we're headed, is complicated. It's state-by-state regulation. Different custodians have different frameworks. Some are regulated in South Dakota. Some don't have, certain trust company statutes. Some just have BIT licenses. But for Gemini, part of where we say we are pro-regulation is that we've always sought out the strictest form of regulation, which happens to be a New York State trust company charter, and that's how we're regulated. But a lot of that focuses on compliance standards, cybersecurity, with respect to capital reserve requirements for our business, regulated more like a bank. We're not quite regulated in the same way that a national securities market would be regulated. And that's something that we think makes a lot of sense for the crypto markets. We think it makes sense for, both the CFTC and the SEC to be regulating these markets in their appropriate jurisdictions. Some assets, the ones that we trade on our exchange today, are largely felt to be commodities, but also for other tokens that might fall into the securities domain, having the SEC step in and provide additional guidance and regulatory clarity for those products, I think would do a boon for investors and others that are looking to participate in them that aren't really used to the state-by-state regulation. And again, there's a different focus on those types of regulations. So I think we need both, but looking forward to guidance from our federal regulators. And we're in communication with them. It's not something that they are giving us the Heisman and saying go away. It's something that we definitely engage with them, as I know others do as well, and looking forward to continuing that. I think, as we all know, our federal regulators don't operate with haste; they operate with prudence, and we think that's really smart and wise. We'd like to see wise regulation rather than fast regulation, and that's something that we're looking forward to as we continue to grow this market.
So a lot of our institutional guests have maybe expressed a little bit of concern, shall we say, about the fact that maybe the U.S. getting lapped a little bit in terms of regulation from an overseas perspective. We're seeing a lot of the interesting products and new initiatives coming forth out of Asia and Europe and Australia, other areas where their regulatory regimes have been a little bit more accepting of what's going on in the crypto space. Sounds like you're not too concerned about that, Jeanine, about the U.S. falling behind from a crypto regulation perspective.
Look, I don't know if it's about falling behind. I think it's what's doing what's right. The U.S. is a big market, so I don't think by any means that we're going to be at a point where our regulators let us fall so far behind. I think other jurisdictions are either less regulated or have less stringent regulation, and that there's a fit for everything, right? We see it in other asset classes as well. There's not one global regulator for futures, for currencies, for equities, right? Everyone has their own jurisdictions. I think what we're concerned about at Gemini is regulatory arbitrage. I get a question a lot, are we concerned with the international markets having more volume than the domestic markets? I mean, look, you run a business, right? Running a strict compliance program is expensive, and that's true, but I don't know that's the wrong thing to be doing for your business. This world, I don't think it's the wild, wild west that it was, 5 years ago, but at the same time, a lot of these standards, especially when it comes to compliance, have to do with doing the right thing and protecting not just our customers from illegal activity, but protecting the world from illegal activity. These are really important things at the root of it all, and I don't see the reason to be to circumvent good regulation, and I think that's what we're focused on, is bringing about good regulation.
The last thing everyone likes to ask about on the regulatory front, the people seem to be fixated on this ETF. They think that's what we need to really make crypto become, a big boy, a real market in the eyes of a lot of people, to have the ETF driving a lot of volume and driving a lot of the other developments that we've seen in other marketplaces. Are you on that train, Jeanine? Do you think we need the ETF to really make crypto become, for lack of a better term, a big boy market? Or do you think we can keep growing the way it is and the ETF will come when it will come?
I think the market will continue to grow whether or not an ETF gets approved. I think that, I think it's the right logic that if an ETF were to get approved, it would make crypto much more accessible to Main Street investors that want to, buy it through their regular securities account. I don't think that's an obvious statement, but I think this market continues to grow without it. And I think that's, it'll be a welcome development if it happens, but I'm not necessarily counting on it to happen.
I'm glad we could finally get you here on the program and on the network to really join me. It's been a while. It's a long time coming. I'm glad we could finally make it happen. We have to keep rolling with the rest of the show, so we only got a chance really to scratch the surface of what you guys have cooking over there in the land of Gemini. We didn't get a chance to touch on altcoin or the Gemini dollar or any of the other legion of things that you guys have cooking over there. So if you thought to yourself, hey, maybe I really wanted to mention this one thing before I go, maybe you want to leave our audience a little bit of a hint, a little bit of a tease of what you guys have up your sleeves at Gemini. Now is the time, madam. And also, if they want to learn more about what you guys are working on, where should they go? What should they do?
Well, the first place I would direct them is to Gemini.com. We have a white paper out about our custody, well, not just about our custody solution, but about crypto custody in general. So that's a great resource, as well as our website, and you can find contacts for anyone you want to reach out to on that website. So if it's me or anyone else here, please give us a shout, and we're happy to answer any of your questions.
Well, glad you can get you on. We'll have to bring you guys back on again as you have more of these initiatives and see how they unfold in the marketplace in the coming months.
Thanks, Mark.
All right, check them out. You know where to find Gemini. It's pretty easy to find. Also, at Gemini on Twitter is a great place to follow them. In between shows, see what they have cooking over there. Like I mentioned, a lot of things popping off in the world of Geminis. A lot of things popping off on the show, too, as we keep on rolling right on into the Bitcoin Breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. This is indeed the portion of the show where we attempt to break down what's going on in the crazy, active, volatile world of crypto trading. Of course, Bitcoin for this segment, but we hit all of them. We try to, at least. And a lot going on in the world of crypto. In fact, a little bit of price action coming into showtime here. Earlier in the day, we saw Bitcoin had trended off for the better part of the last week, even though there was a little volatility in there. Right, coming into showtime, we were down about 120 handles from last show. So we were trading right around a 10,270 or so last show. Coming into showtime, it was about 10,150 or so. And then, of course, it sold off a little bit down to about 10,140, 10,139 as we were chatting with the Gemini folks here. So a little bit of continued downside here as the show has progressed. It's kind of an interesting week. The low of the week was down a little bit shy of the 10,000 handle. We talked with the crypto patterns guys, I should say, on the last program, talking about how that 9,500 level was so important from a technical perspective, how Bitcoin really bounced off that level. We saw some options activity reflecting that as well. People were selling puts along that strike pretty aggressively. This week, the bouncing point seemed to be right around 10,000, because no sooner did we break through it to the downside, got to about 99.84 on the downside on September 11th, and it pretty much turned around and immediately rallied about 400 handles the very next day. So on the 12th, it was up about 400 points from there, and we hit the high of the week actually on the 14th, about 10,412, before selling off a few hundred more handles back down to where we are right now, right around 10,140 coming into showtime. Of course, all this back and forth, up and down, means a little bit more vol making its way back into the Bitcoin marketplace this week. Remember last week we talked about how volatility had been effectively annihilated, got down to about 60%. Well, it's back up again, threatening 90, about 88%. This is, of course, 30-day realize, so a bit of a lagging frame of reference, but we like sinking our teeth into realize on crypto space. It's a little bit easier number for a lot of people to wrap their heads around. In terms of actual options volume as a result of this movement, it's actually been a little bit light, which is kind of interesting, a pretty light volume week. Remember, we used that 30 million or so overall value. That number is kind of our barometer for what we're seeing out there in terms of an active day or not. We pretty much only had 2 days over the past week over that level. We hit 35.2 on the 12th, so that was pretty much the day we saw the big upside swing in Bitcoin. And on the 15th, so the day after it hit its high for the week, is when we saw another day, 38.3. That's actually the high day for the week. In terms of what's been actually trading, light volume, but let's see if any interesting trends. The biggest trades out there, again, these are coming from Deribit and some of our friends over there at SKU, SK3W. Check them out for all your crypto options and futures analytics. And the big prints out there was a 50-lot sale of the March 4,000 put. So draw a nice little line in the sand there at that 4,000 level. Also, the other large trade kind of catching people's eyes here. Again, another 50 lot. So keep the size in perspective there. Selling the set 15,000 calls. Seems like a lot of premium harvesting to the downside and to the upside. A bit of a funky maybe time strangle going on. These were not related trades. They didn't go up on the same day. But still interesting to see maybe a net bit of a pattern there. Harvesting some premium on the upside of the call skew and then on the downside with the put skew there. Interesting. In terms of the term structure, volatility, pretty similar to what we saw last week, maybe a little bit of a crick where we get to the lowest end, again, is at the front portion of the curve. The contract's expiring later this week on the 20th of September. Then it ticks up a little bit to the end of September. Then it actually ticks down a little bit into October, which is kind of fascinating, before trending up to about, looks like about close to an 80 implied level, getting into actually beyond Dees now into March. Dees is shy of a 75, which is kind of interesting. Remember, before it was a little bit backward. There was a bid to the front portion of the curve. Now that's come off a bit. Looking at the call to put out here, what's been active, what's been lighting it up. We're seeing calls and puts, that number effectively unchanged at about a 55%. It's pretty much almost exactly where it was this time last week. So not a lot of movement there from a call to put ratio. OI also, as you might imagine, up slightly, pretty much unched from last week. We were at 587 million last week. This week, 592. Again, that's all down from the record 635 million level we saw back in or around mid-June. Let's turn to the futures now, see what's going on out there. Pretty light day here for the futures. Looks like about 2,500 or so contracts total going up. Again, that's a 5x coin, but still not a lot of volume. Actually, that's pretty much been the narrative for this past week as well. Pretty much every day was shy of 4,000 contracts. 3,300 last Friday, 3,300 again on Thursday, 3,600 on Wednesday, 3,500 on Tuesday. The big day was Monday with over 4,000, 4,227. In fact, the biggest volume day of the past few weeks was the day after Labor Day, the 3rd, with about 7,658 contracts. So maybe some of that pent-up action from Monday, of course, was closed for the Labor Day holiday, so maybe some of that spilling over into Tuesday, why that was the biggest day. Otherwise, hasn't been a ton of action on the futures side as well. All right, we got to keep on rolling. Let's see if we can break down a little bit of the old altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody. Welcome to the altcoin universe. This is indeed the portion of the program where we break down what's going on the other side of the fence, outside of Bitcoin. We've talked a lot about Bitcoin dominance lately, and it is still most of the oxygen in the room going towards the Bitcoin side of the fence. Looking at these market cap numbers, remember, take the overall amount, the value with a bit of a grain of salt. The percentage, I think, is fairly reliable, though. Again, Bitcoin number one, about 180, almost 181 billion. Number two, ETH at about 20.5 billion. Number three, XRP at about 10.3 billion. Number four, Bitcoin Cash, closing in on 5.5 billion. And number five here with Litecoin, about close to 4.5 billion. Respectively, that puts ETH at about 11.4%, XRP at about 5.7%. Bitcoin Cash just a tick under 3%, 2.99%. And Litecoin round out the top five here, about 2.45% of overall market cap. And in terms of what's going on in altcoin, it actually was a bit of a mixed week out here. Again, it kind of depends where you're looking in terms of how things were shaping up this past week. A bit of a rally out there in ETH, so we'll start there. Of course, the number two product. We were trading about 179, a little bit shy of 180 on last week's show. And coming into this show, we're at about a 192. In fact, just ticked over the 192 level. So up about 12 handles from this time last week. A modest rally, but if you're long ETH, you'll take it. Certainly better than a bit of a sell-off. You know, XRP, Ripple, it continues to kind of be mired. Can't really get out of its own way. It's almost exactly unched from where it was last week. Last week it was 25.97 cents, just a little bit under 26 cents. This week it's at 25.88. So actually a little bit of weakness there as the week has gone on. That's been another story of endless fascination when we first started covering and analyzing the crypto space. So much of the heat was on XRP. Everyone was writing in. Everyone was trading it, professional, retail, I don't care where you are. Everyone said, of course, Ripple was the place where the action was. And, of course, we had the big run-up with all the rumors of it going over there from Kraken to the other exchanges out there. Kraken, of course, was kind of the monolith in the Ripple space for a long time. That rumor alone drove it up north of the $3 level. We've never really seen a commensurate move in Ripple ever since. And so I know you're still out there, the Ripple bulls, but it hasn't been a big story for you guys. Not a lot to sink your teeth into on the upside for Ripple, unfortunately. A lot of headwinds in that space, a lot of competitors and a lot of issues on that side of the space. Litecoin also kind of taking a bit of a breather this week, pretty much unched up about $1 from where it was last week. It was trading about 69 last week. Coming into showtime, it's a little bit north of 70. Actually, almost up $2 now, about 70, 75 now. So about $1.75 on the week, but a pretty light week, pun intended, for Litecoin. Bitcoin Cash also kind of mixed out there, down about 1.5 handles from this time last show, which if you've been watching Bitcoin Cash, that's a big mover. And this week, it was at 304. Last week, at about 302 and about 75, and actually now it's ticked up a little bit there as well, down to about a 1.25. So again, kind of a bit of a bit of a quiet week from an altcoin perspective. The folks at Crypto Patterns have been on the show many times. They've written some interesting write-ups. Check them out, theoptionsinsider.com, or head on over to cryptopatterns.net. They're talking about how altcoin still tends to lag Bitcoin, and from their perspective, the technicals, the analysis they like to do works a lot better still on Bitcoin than it does in a few others. The one they've continued to mention, the one they continue to watch is good old EOS out there. It still continues to be their one that I think they're sinking a lot of their analysis in terms of bang for their buck is where they like to hang their hat. EOS actually never makes it onto our show because it's always out of the top 5, but just by a hair, it's actually number 6. So Litecoin's coming in about 2.45% market cap. EOS about almost a little over 2.25, about 2.27%, puts a little bit north of $4 billion in terms of market cap. So maybe that's an interesting one. We've heard a few others kind of echo that sentiment. It might be one we have to start factoring into our analysis here. Meanwhile, speaking of factoring things into our analysis, I want to make sure we get some time for you guys here on the show as well. So without further ado, let's keep on rolling right on into your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Welcome to the Crypto Questions. This is where you guys take the reins. Your questions, your comments. You know how to get at us at Options, most of the major platforms. You can use the live chat if you're listening live. You can use most of the devices you listen to us on, including our mobile app, to send questions that way, or the old-fashioned way, questions at theoptionsinsider.com. That also works. Website feedback form, carrier pigeon. I don't care how you send it to us. Get at us with your questions, comments. We'd love to hear from you guys. Just like Lanik here. Let's start off with Lanik. He wants to know, is Bitcoin pricing in a low volatility December, like the VIX future, like the volatility future? If you're listening to our volatility program, listeners, it's been kind of an interesting wrinkle out there in the volatility space. For the better part of 2019, the broad volatility space has been pricing in a very quiet December. It's pretty much been the quietest month, the cheapest month on the board when you look at the term structure across all the different months for quite a while out there in the VIX futures. Ticking up a little bit recently, of course, with the issues in the Middle East, giving a little bit of lift to volatility across the marketplace, but still one of the cheaper levels on the board. And that's kind of been an interesting puzzle for us, given certainly the recent activity we've seen in December over the last couple of years. Hasn't been the quietest month on the board by a long shot. So pricing it that way seemed a little bit of a head scratcher to us. And as I mentioned earlier here in the program, at least from an overall term structure in the options out there on Deribit, and we can break it down different ways by the futures. I'll really look at the options here. That's not the case in Bitcoin as well. Remember, the cheapest portion of that curve, of that term structure, was actually in the weeklies, effectively the nearer dated options. The weeklies going out this week have the lowest vol on the board, and it effectively ticks up from there. A little bit of a crick there from end of September into late October. So that September to the end of October monthly, it actually looks like it stays the same, maybe ticks down a little bit, kind of unched, let's say, around, it's kind of hard to tell on the legend of this graph, around a 71 or so, but it stays kind of unched, maybe comes down a little bit, but that's really the only tick down we see in the term structure. Then it keeps going up to DEES, which is right about close to a 75, about a 74 and change, and then north of a 75, threatening an 80 out into March. So the farther out you go on the term structure, it's actually pricing in more vol, not less. So the short answer to your question there, Mr. or Mrs. Lanik, is no. They're not pricing it in. It's kind of the opposite of what we're seeing in VIX futures. Maybe factoring in maybe a little bit more tumult to go with the rest of the year, maybe a little bit of price action. Certainly if you're looking to trade these, that might be a welcome development for you guys out there. A little bit more vol means a little bit more back and forth, a little bit more trading opportunities for you guys. All right, moving on here. Max wants to know, what do you guys think about the upcoming backed futures? I think, well, like all of you, I think we're waiting to see what we get with those. I think on the surface, I'm excited. Everyone, on the show, the more products, the merrier as far as we're concerned, particularly from a listed U.S. regulatory approved product perspective. We don't need to recommend you need to use a VPN to get to, or you're not tunneling to some exchange no one's ever heard of in Eastern Europe or South America or anything like that. From a listed U.S. products perspective, the more is the merrier from our perspective. Now, we just talked with the folks from Gemini. Not every listed product is going to work. There's no guarantee the backed one will either, but I think more more products, more options out there, pun intended, for you guys to trade is a good thing. It certainly seems like the physically settled side of the fence is where a lot of people are hanging their hat these days. That seems to be the next wrinkle in the crypto product offerings, and back certainly leaning that way. So we're excited to see more players in the table, or I should say coming to the table. For you guys out there, more things to trade, for us, more things to analyze and parse and talk about. It's a win-win all around. So more products with a little bit of volume, giving a little bit more legitimacy to the crypto space, I think, is better for everyone. Last up here, let's go to Thomas. Thomas Weld, he wants to know, how do we get, let's kind of got the magic question here, how do we get more OI, aka open interest, for crypto options? Well, that's kind of been an interesting thing, because your first blush would probably be, a little bit more volatility, a little bit more underlying movement. And yet we've seen that. We've seen the vol get to stratospheric levels and then come off again, and vice versa. And so that hasn't really necessarily translated into the volume we'd like to see on a platform like Deribit or others. The next obvious answer to that question is what we were just talking about with Jeanine earlier, the ETF. The ETF could bring a lot of players into that space. We saw that with the VIX product in Universe. Once the ETP started hitting, a lot of volume started coalescing, and it really started driving volume in other products as a result. So maybe the ETF is what we need to really cement a lot more volume, a lot more flow, and as a result, a lot more open interest as a result in some of the options product. Maybe the option on the ETF is where we need to look for that. Maybe it's not going to be the option on the coin itself for a while. The other alternatives that we were just talking about, the backed futures, if those take off, maybe we get options on those. And the more listed products here in the U.S. that you could rely on from a regulatory, from a counterparty perspective, will also help that. Deribit's a great platform, but you still need a VPN and others to get at it, and a lot of people are not comfortable with that. Certainly large institutional players here in the U.S. are not, so that's limited it as well. So I think maybe that 1, 2, 3 punch that's a lot, I know, but I think that 1, 2, 3 punch, because clearly it's not enough just to have underlying price movement and volatility. We need more. Like I was mentioning earlier in the show, we need that plumbing to come in, whether that's an ETP, whether that's more products, whether it's all of the above. But some combination there, I think, will be what it takes and what is required to really drive the crypto options OI and the product itself to the next level. All right, everybody. Unfortunately, that music means we've come to the end of another epic journey through the world of crypto. What a fun conversation it was. I want to get the folks from Gemini on for quite a while. Glad we can make that happen. Of course, check out what they have cooking over there. Type Gemini and crypto into your Google machine, and you'll find it. Not too hard to find. Of course, get the app on all your mobile devices. They have a lot of products in the works, and who knows? It sounds like maybe they have a handle on this biggest problem that's facing the crypto space, which is the custody and the clearing and all the, not exactly the sexiest side. Everyone likes to talk vol and everything else, but it's the plumbing that really makes these things happen. It's the old saying from military strategy, amateurs talk tactics, pros talk logistics. And that's when it comes to products and marketplaces, it's a similar spectrum at the end of the day. You need the logistics, you need the underpinnings before you can have all the other sexy stuff like the volume, the volatility, all that can happen. You need the pipes before you can get the flow. That's pretty much where we are right now. The folks at Gemini thinking they maybe made that happen, so we'll keep an eye on that. I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep them coming, and we'll see you back here next week with more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.